Okay, we are live and recording. How's everybody doing? Okay, so this discussion is going to be on something that we've been looking at. Everybody is pretty familiar now with our zone methodology if you've been around for a bit. But what we've been working on is trying to incorporate kind of the same approach, but using a bit of a longer term, what would be, I would consider, a swing type of methodology. And it's going to look very, very similar. This is over here on the right is going to be the ZoMo, which stands for momentum zone, or zone momentum, and then this is our regular zone. We're going to be looking at NVIDIA, and you can see that, it looks, this would not be an entry for us in the zone, right? Even though we're still looking, the PFE is buried, the DMI is working down. Everything else you could probably rationalize along, but it's not the strongest case. Whereas here it's going to be nearly the same settings, except I'm using an hourly instead of a 30-minute, and I'm not including overnight data. Okay, and so that's why it looks a little bit different. But you can see that this, just on structure, looks a little bit better. Well, it looks quite a bit better. We're right at the 7 period. On something that has shown a lot of strength. ATR is below, everything is looking good here. PFE is still pinned up. DMI is coming down, but that's going to happen when you have us coming off the highs. Remember, the DMI is not nearly as important to the PFE. PFE is a non-starter for me. If the PFE is not looking strong, I'm not buying, and if it's looking weak, I'm not selling. Excuse me, if it is looking weak, I am selling. Okay, so this is NVIDIA, and we're sitting here right at the 7 period. PFE is still pinned up. So we have our buy signal. This is the one that I was looking at and looked to be the best candidate. So now we treat it just like any other swing entry, an IB, a gap fill, a swing breakout. We're going to be doing spreads with these because we're intending to hold them over overnight. In my head I'm thinking anywhere 2 to 5 days, since we don't have a ton of live data. We don't know how exactly these are going to play themselves out, and so if you want to just sit in the background and watch, that's cool too. I won't feel bad, but this is what we are doing. So now we have our entry, which is essentially right here. So we treat it like anything else. Where do we start? We start with, if I can find it, we start with the trading tool. Here's our trading tool. And we have NVIDIA up here, and let me pull something up here so I can get my vols correctly. Okay, so we have NVIDIA trading 196.75. Let's go out to not regular no, because you start getting into that holiday stuff. I don't want to mess with that. We have to make sure that we are not running into earnings. Earnings, they're showing, it's estimated the 21st. The implied volatility is telling me it's going to happen somewhere after the 8th, but before the 15th. So that's why I'm using November 8th options. November 8th options are 34.30 vol. 34.30 vol, which means that we are going to, if we're using a 59% confidence interval, we're targeting about the 212 strike and all the way up to about the 214 strike. What do we have available to us as far as, let me pull the options matrix in here. So we have this, and we want to go out to here. So we have $2.50 wide strikes. And then we actually have $5 wide strikes when we are looking up above 210. So going for the 215s, you're looking for more than a standard deviation move up. So the first thing I want to look at is, can we do like a 207 half 210? Is that going to give us the reward to risk that we need for something like this? And so let's see where this thing is trading. This is trading, the market right now in this option is 55.65, so 60 mid-market, $2.50 wide spread that is trading for 60 cents. So Now we can say, was that enough reward to risk? So we have the 207 half, 210. We know that that's going to max itself out at 210 or higher. We're going to pay 60 cents to get in this. That seems like a pretty darn good, because we're targeting less than the 59% confidence interval, and we're getting over 3 to 1. I would be all over that, and we will be, coincidentally. And everybody, feel free to put your questions up there. I'm not going to answer them right away. I want to get through this. And so what we'll see here is that we will be looking at, let me make sure this is November 8th, 207 half, 210, 210 or higher. So we're getting more than 3 to 1. This is, I think, especially on something that can, if this market takes off at any point, then we're going to be pretty good. When I put out these signals, I'm going to be putting out hard stops at a 50% drawdown and a target exit at 70% profit. So that's what you'll be looking at in the email and the push and everything else. I will indicate them as a ZoMo. You will treat them allocation wise as what we are doing with our swing trades, which right now is 2%. ZoMo is 2%, so we're going to be risking on a $25,000 account, we're going to be risking $500 per signal. Okay, so we can pull this in for you. You can see here in the ZoMo, ideally holding it for 2 to 5 trading sessions, 2% allocation. This thing's going to cost 60 cents. We're going to do an 8 lot of this. Okay, so Mickey asked a question: Is theta going to be a big problem with holding them for multiple days when expiration is so close? Well, one, I would argue that expiration is not all that close, and two, that's why we're doing a spread, right? If we just did a call, then I kind of get where you're coming from. But the theta, and remember, we're not going to hold this until November 8th, ideally. Hopefully, we don't have to, but we can look at the risk for this, and we can see that the theta right now is a penny. Now, of course, that theta is going to, if we go out in time, so let's say next week, theta is 2 cents. If we go out another week to the 30th, theta is 3 cents. That's why we're doing the spread, because if we do the outright call, theta would become an issue. That's why we're doing the spreads, and that's why we do spreads with our swing type trades, to hedge out the things that we don't want to trade. We're trading this on a directional basis. Okay? Any other questions on that? This is actually a pretty short video, less than 10 minutes. Let me see if there's any other questions. And if not, I'm actually going to put this out, if you guys don't mind. Like I said, if you want to, just paper trade this, I'm totally cool with that. If you just want to watch, you can do that too. But I have enough confidence in this to move forward with it. Now, the expiration date is going to be 11/8, and we have no intention of holding it until 11/8. Okay, well, let me render this video. It'll be up on the campus. I'll probably put it out on the blog today, and it'll be in the Documents tab. Yes, Lester, this is a long trade. We're buying a call vertical. Where you were talking yesterday, we were talking about maybe the 210, 215, but Nvidia was higher at the time. We were talking, I think we were talking back in this area here yesterday. But I like these I like this. Okay. So let me get that video out to you. I'll get the signal out, and we'll see what happens with that. If you want to pull back on allocations because this is kind of new, I'm fine with that too. I'm going to do 2% though. All right, thanks a lot, everybody, and I'll get this out to you as soon as I can.